Um, so tax planning is the next biggest mistake that small business owners make. And it's basically your right to arrange your financial affairs to keep your business to a minimum. Depending on the size of the business, this could save you 10, 20, $30,000 a year. So it's definitely money well spent getting your tax plan done, particularly if it's going to save you that much in tax. So let's listen to what the late great Kerry Packer had to say about it.
What the Four Corners program suggested was not that you were evading tax at all, that would have been libellous, but that you were minimising tax.
There's nothing wrong with minimising tax. I don't know anybody who doesn't minimise their tax.
And that you were doing so in ways that were contrary to the spirit of the law.
Well, I just got through telling you what I thought about that. And what you're saying is exactly what the Four Corners program says. I am not evading tax in any way, shape or form. Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads read. Because as a government, I can tell you, you're not spending it that well that we should be donating extra.
Yeah, so I'm just going to pull that up again. So, you know, the thing is that, with online accounting and Xero and these sorts of things these days, tax planning is not just for billionaires. It's actually for small business owners. Having your bookkeeping up to date, having a budget in place, reviewing your financial reports. We kind of know how your business is going month in, month out, quarter in, quarter out. So when it gets to the pointy end of the financial year, we can often forecast what your expected tax liability is looking like, and then provide you with some suggestions or recommendations of what you could potentially do to save tax. Look, the tax law changes all the time. So there's always bills going through Parliament adjusting taxes. And for example, the instant asset write-off is no longer. Now the instant asset write-off is up to a maximum $1,000. So that's a big that's a massive change in tax planning. But it's not for billionaires. It is for small business owners. It's not an expensive exercise, and the return on investment is often huge. So, that's $30,000 that you could be, investing back into the business, retiring some debts, going on a family holiday, whatever it might be. The point is that, tax planning, if you people often say, my accountant's costing me money. Well, tax plan is one of those services where we're actually adding a huge amount of value because, it might be costing you, a few cents in the dollar for each dollar you get back in terms of tax planning. Potentially. Every business is different, however. So, what's right for Dennis's business is different to Ryan's business and all that sort of stuff. So, but, a good relationship with your accountant can, get those sort of things, scheduled for your business so you know where you're going. That's the other thing about tax planning is that, 6 out of 10 small business owners feel like they don't know enough about their accounting and finance. Tax planning is one of those things that you're going into the 30th of June, knowing approximately what your tax debt might be looking like, approximately, and what you can do before the 30th of June to minimise that and what effect that will have in your total tax bill. So, when you're talking to your accountant, when it comes to the tax time, when you're lodging your tax returns, there's no surprises. You've been informed before the event and after the event, and was in line with what you're expecting. The next, look, tax planning strategies. This is a little bit complicated. Could seem a little bit complicated. Just look at the yellow. So we've got two. This is the same business. This is just it's got heaps of errors in it, but it's just to demonstrate the point. There's hundreds of different tax planning options and strategies available, but this is just one. And it's very simplistic just to demonstrate the point. So if we look at the yellow, the director has reduced their wage from 150 to 100. The tax payable in the company is still zero, but the total tax payable for the director is reduced from 40 down to 22, which led to a $17,500 saving. There's a few Division 7A issues in this, that potentially could flag themselves. So don't do this at home, kids. Get professional advice around it. That this is where your accountant really earns their stripes, I suppose. But, I would be delighted if my accountant came to me and said, look, I think we should be reducing your wage or increasing your wage or paying a dividend this way or reducing a dividend or whatever it might be, particularly if it's going to be saving me tax. So, some general strategies there is, you know, you always have a look at the business structure. You know, sometimes sole traders need to turn into a company, or sometimes trusts need to turn into a company. So we've got to understand the business structure. And you're looking at a forecast tax position in April, May, a couple of months before the end of financial year. So you know what your tax liability is, what you can do before the 30th of June, and then just sort of review which options best suit what you can do.